bring in our next guest because we want to talk about Senate Republicans linking the repeal of the Obamacare individual mandate to their tax reform plan. Jonathan Hoenig at CapitalistPig.com joins us now. Okay, if tax reform fails, and I want to know what happens to the stock market, but if you think tying in the repeal of that Obamacare individual mandate, if that maybe guarantees that tax reform fails.
Yeah, I mean, it's a real risk, Leah, especially since so much of the stock market gains we've seen since the president's election have been predicated on that tax reform. But, you know, this was a huge campaign promise of the presidents, of the Republicans for, the last 8 years now, to bring more freedom, more individual choice to the healthcare market. But as you said, tying it to the tax cuts not only likens the chance that neither will get passed, but also brings some real risk to the stock market. You could say maybe perhaps we're seeing it this morning with some downward move in the futures, but some real risk that, in fact, the tax cuts won't get passed after all.
All right, we got to see how this one plays out. Obviously, we'll get news soon with the House. I think they're voting today.
Yep.
I want to talk to you about specific stocks in general. General Electric and Boeing. You know, it used to be General Electric was old, reliable. It was the most valuable U.S. industrial company. Well, that stock is the worst performer in the Dow this year. Let's look at the chart. It's down 43%. On the other hand, Boeing is up almost 70%, and it's now the U.S.'s biggest industrial. Is it time to buy GE?
Well, you know, it can only go to zero. And I have to tell you, Lauren, I mean, given the way that GE had been mismanaged by Jeffrey Immelt for years, that's not my target price. But this is going to be a company that, for one thing, I think heads even lower. This stock has been hitting 52-week lows since the beginning of the year, even as the rest of the market has vaulted higher. And that kind of dramatic underperformance is not a good harbinger of things to come for GE. And I think it oftentimes goes to the fact that markets tend to anticipate the news. I mean, the stock drops 40%, and then they cut the dividend in half. Now, you asked about Boeing as well. Huge performer this year. I think likely large in part to perhaps renewed tensions on the geopolitical scale with Russia and North Korea. What worries me about Boeing is what worries me about the entire market, Leah. Overextended, massive upward move, no real retracement, and Boeing in particular has what they call a gap on the stock chart, about 15% lower. So I think you got to be very careful, despite the massive run, in putting a lot of new money to work, especially given what a run the markets have so far this year.
Well said, Jonathan. And just to correct myself, the House will vote tomorrow. Thank you so much.
Yep.
Good to see you.